making sure investors understand, the risk of an investment. I had an investor about, I guess 3 months ago asked me, he goes, well, what are your minimums to get in? And I said, that's the wrong question.
Welcome to the Yacht Captain Investor Podcast. I'm your host, Scott Kidd, where every week we dive deep into conversations with real estate pros, business owners, and maritime professionals about their mindset and journey to success. Please help support us on our journey and our channel by liking, subscribing, and commenting below so we can help you on yours.
I said, you shouldn't be focused on what my minimum is. What you should be focused on is how big of a check can you write me, walk away from that money, never see it again, and it not materially affect your retirement or your lifestyle. And his eyes got about this big. He goes, nobody's ever said that to me. I said, now, I don't plan on losing your money because my money is going to be in there alongside your money.
Yes.
I said, but you have to think about investments that way. It's not just what can I get out of it. It's what can I lose? I tell investors all the time, I said, there's two basic questions you need to be able to answer. One of those is, how does this thing make me money? Mm-hmm. The other one is, how can this thing lose me my money?
Yeah.
If you don't understand those two fundamental answers, you need to go back and do some more homework before you write anybody a check.
Yes, that's certainly true. I mean, I have a list of probably 150 questions that I ask, especially even, and I change the questions quite a bit around, depending on if it's a partner I'm getting involved with, whether it's a sponsor or a fund manager, because, you definitely want to vet who you're getting involved with. That's, for me, that I've come to the conclusion that that's the most important thing, because deals go bad and things happen, but you don't ever want to be in a situation where the person that you invested with and disappears or doesn't handle themselves well, that's very important to me. Like I have some limited partner things that I've invested in, because I'm an investor as well in other people's deals, and they've kind of gone not the way we thought, because a lot of things didn't go the way we thought in the last few years, and but it was the person has been communicating with me the whole time, and they said, well, truth be told, I don't know how it's going to work out, because we had a bunch of things with the property that when we initially purchased the property, it was 8 months, almost a year before we could touch it, because the city had an issue with the title, so it wasn't clear, and so we couldn't do anything. And then after that, they started investigating the property, and they went through it with a fine-tooth comb, and we had all these other extra permits we had to pull, so it took another 6 months. And I said, well, you've been communicating with me the whole time, so it's okay. I invested with you, and and I know you're doing the best that you can with, being a good steward of my capital. And he said, but look, we're putting our own money in, and we're doing our best to save the deal. Our worst and best case scenarios, by the end of this year, we'll hopefully to get your money back out, at least most of it. And I said, well, okay. Because it's like you said, it's money that I was hoping to have a 2x multiple in 4 or 5 years. But, with all the things that have happened, they can't refinance, and a sale is going to be probably a discounted price compared to where they thought they were going to be. Pro forma.
Yeah. Easily 30 to 50% off.
Yeah, and it was bought at 30. It was bought at a good price anyway, 30 to 50% discounted anyway. But the sale price is going to be a 30 to 50% discount of what they anticipated it to be at that point. So it'll be at hopefully a break even for us. But but the key thing is the person communicated with me and said that, hey, this is what's going on. And, that's the best. I know that they're doing the best that they can for us. And they didn't just disappear and may not be able to find, because I've been through those also, where the persons aren't very forthright in communicating. They were great until they received the money, and then the communication wasn't so great after that. Which that's one thing that I stress with people is that, hey, make sure that the communication is up front, because generally the communication you get at the beginning is what you'll get most of the way through.
Yeah.
And there are anomalies, but you know, as far as like an investor's taste, what do you see them liking most right now? Debt or just any type of cash flowing asset?
Um, Debt is becoming very popular,
Yes.
particularly if it's in a first lien position. Mezz debt, which is usually a second lien, is a kind of a next favorite. There's some specialized funds out there that are very niche debt funds. One of them focuses on lending to marijuana growth facilities, and they're very particular about how they do that, because there's certain states you just can't do it in.
Yes.
And so that's part of their diligence criteria, is making sure hey, somebody's not trying to set up a marijuana grow farm in Texas, which right now would not be legal.
No,
It's kind of stupid. They should.
Yeah.
But, I mean, but yeah, I mean, debt's a big one. The triple net funds are another one.
Yeah.
Because everybody's chasing cash flow.
Yeah.
At car washes, I was kind of surprised at how well they cash flow.
Yeah, I've seen a couple of funds there that's people that were heavy in the multifamily space have gone into just car washes. I see businesses as well, but you have to be careful, like you were saying. You have to know what you're getting into, and because business can vary. If it's cash flowing business, and a laundromat is different than a car wash, and
and mobile home parks
different than a mobile home park or an RV park or a triple net. Like, to me, a triple net with an anchor tenant. By anchor tenant, you're talking about your Chipotle's, your Starbucks, or your Kmart. Not Kmart anymore, but your Walmarts.
We just dated ourselves because I recognized your reference.
Yeah.
I grew up with that. That was a big deal.
Kmart was a big deal back then. But with an anchor tenant, comes with that was corporate guarantees, and that's not guaranteed by the clients, guaranteed by the bank.
At least a 10-year lease on it.
10-year to 15 years, because most businesses, they don't want to move because they want that walk-up traffic, and they're there because of the traffic.
Yeah, I mean, that's the thing a lot of people don't understand. It's like moving. When I was very involved with our church at one point, we were looking at moving to a new location because we'd outgrown the one we were at. Mm-hmm. And one of the things that we looked at in the study is you don't want to move more than about 3 miles, because you're going to lose a lot of your core congregation if you move more than 3 miles. Yeah. And businesses are the same way. If you have to move for whatever reason, the perfect thing would be to move across the street.
Yeah.
Because you're still in the same vicinity, but a lot of times that's not an option.
Yeah, and especially with zoning and stuff like that, you may not have buildings and stuff like that can handle the capacity you're looking for. And then you have also occupancy issues that you have to look at as well. In certain areas, what is the certificate of occupancy, and for those buildings, you have to really take all those into account. But with the triple net leases, you're looking at a very stable business model if you have an anchor tenant in there with the corporate guarantees. Granted, the returns aren't as high, but they're much more stable. It's less risk, but with less risk, you get less returns, but you get stable returns. And a lot of times they can be quite competitive to some of these large value add projects, because as you've seen over the last few years, some of these have taken quite a bit more time with labor issues, supply chain issues. Mm-hmm. Now you're looking at tariffs and other things for all those things to get straightened out. So, the projects
Well,
have gotten
and one of the
extended.
things that we've seen, like the property we closed on last February, was 195 units, a heavy value add. We took over; it was around 69% occupied, and we got it by February, I think, of this year. So we owned it for a year. Our occupancy was up to about 91%. But one of the challenges we're seeing right now is, ICE is being very aggressive about, trolling properties, looking for, literally profiling, looking for Hispanic individuals that they can go and deport. As a business owner, we rely on those people, not just for labor, but also, as tenants. And
Yes.
most of them are very quiet. They obey the law.
Hardworking.
They're hardworking. They pay the rent,
They
and
don't want issues.
they don't want issues.
Yeah.
And I'm all for, I believe anybody that wants to come to this country should be welcome as long as they go through the legal process.
Yeah.
Now, if they came here illegally for whatever reason, I don't know their circumstances. Maybe they were, running from the drug cartels, and they didn't have time to wait at the border because they'd end up dead.
Yeah. Or maybe they're just running from abject poverty and they saw the opportunity.
Yeah, and I get it, but there should be a path for those people to be able to become legal.
Yeah,
they are good, hardworking people.
It's obvious to me. It's not completely shut down the border or completely open it up. There's a solution somewhere in between where we have a path to create for people that want to work and come here, because we need people that want to work. I mean, there's so much opportunity, so much growth that's going to be happening over the next 10 years that we need the people, and we need robots, we need AI, we need all of them.
And I was at the World Finance Forum last week, and one of the things, one of the speakers was speaking about AI, and they made the comment, AI is not coming, it's already here.
Yeah.
And it's human.
Yeah.
And by that, what they meant is that AI is not going to replace people.
No.
What it's going to do is she said one of the ways to think about AI is, it's a magnifying mirror.
Yes.
If your processes are jumbled and ugly, AI is just going to make it more jumbled and more ugly.
More ugly, yeah.
And, if your processes are well defined and, very well established, then AI will take that and enhance it. Because, we look at AI to help reduce things in our office like that people don't want to do.
Yeah.
Or that aren't value add.
Yeah.
Invoices and stuff have to get processed in the office, but that doesn't put money in our pocket.
No.
What puts money in our pockets is having our property manager and our leasing agents be able to meet people at the door, greet them, walk them around and show apartments, things that AI can't do effectively. AI can be great at, taking the invoices, entering them in the systems, and, making sure everything's balanced. And
quantifying the leases, pulling up the rent roll, making, optimizing all those things, and, sending out the invoices efficiently, immediately. That saves man hours and stuff. That cuts down the bottom line and stuff like that. But, a friend of mine said a little while ago, like your speaker you were listening to said, it's already here. But, people always keep saying, AI is going to take my jobs. Robots are taking my, it's like, no, but somebody that knows how to implement AI will take your job and is already probably taken your job, because they can probably do the work of 2 or 3 people that are doing the exact same job, like an office manager or something like that. Whereas a lot of the processing and stuff and admin will probably be reduced, but it will create a lot more jobs because there'll be more growth because of it, because you have all those freed up man hours with any new tech that comes in.
I mean, you can go back through history and, look at, if you go back to medieval times,
printing
your
press.
light source was a torch or a candle.
Yeah.
And candles were preferred. So eventually, people would replace torches in their house or their cave or whatever with a candle because it was it was handy. And then he moved to kerosene, and then he
Yeah.
moved to electric lights. Well, now we've got LED lights,
Yeah.
and there's just
Yeah. I
that
mean,
progression of technology
we
is.
had the printing press, we had newspapers, then we had telegraph, we had telephones.
Hmm.
Then we had, we had shortwave and all those things, and we
Yep.
had, the internet. Then we had social media. Then we
Cell
have
phones.
Wi-Fi, cell phones. Now we have sat phones that work off Starlink and stuff like that, and they're as clear as day.
My iPhone will work off of the sat links now.
Yeah. I mean, mine. We use it a lot on the boat. I mean, the Starlink. It was a game changer for us a couple of years ago when we implemented it, because the internet data before was just
Slow.
really slow, and the throughput was even slower. So, and then the latency was really bad. So
Hmm.
you might have been getting 20 megabits, but you weren't really getting that. So the bandwidth would get all jumbled up. And now we're getting probably about 200. And it's, we can have everybody on the boat, and everybody watching movies, doing whatever. And it never takes a blip. And Elon Musk, love him or hate him, whatever your thoughts are him, or, whatever
He's a visionary.
he builds some very, 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 very forward-thinking things that
Oh yeah.
are changing our lives on a day-to-day basis. That in a few years are going to be commonplace. Like anything else. But technology in real estate, I see AI and a lot of these processes, because just kind of optimizing what we're doing. Especially what I'd love to see is a very optimized process for closing from start to finish, like from LOI to execution of contract.
Hmm.
That process can be optimized and simplified in so
Yeah.
many ways. Like for instance, when you go buy a car nowadays, you can buy it before you even go to the dealership. I
You
mean,
don't even have to go to the dealership.
no, they'll bring it to your house.
Yeah.
And buying a property should not be that complex, but there's so many different people and facets involved
Mhm.
that and so many different documents from county, city, state, and
Well,
everything
one of
else.
the things that I would love to see about the whole closing process is put title on the blockchain.
Yes, I was that was just coming in my head, because we had an 8-unit property that we bought and sold in a period of about 8 months, and we had bought it and we did some rehab to it and sold it. Luckily, right before the rates went up like crazy, and found a cash buyer. So it was everything lined up for us. It was the man upstairs was looking, or woman upstairs was looking out for
Hmm.
us that day. I mean, it was things lined up very well. But when we went to sell, the same title insurance company said, "Hey, wait a minute, we got a lien against the property from 2.5 years ago." And my partner goes, "Well, what do we do?" And I said, "Well, it's the same company. We paid for title insurance. How come they're just bringing it up to us now? We're not paying for that. They need to cover that. They
Yeah.
need to sort that out." And if that was on the blockchain, it'd be all right there, all the history of the property, and
Well, and the nice thing about it too is once it's on the blockchain and title is established and it's clear until someone puts a lien on it, but
yeah,
it'll all be publicly available.
yeah, and then you'll know more what you're getting into, and it'll make it. We can get to a seamless transaction like we do with so many other things, that I think that it's a long time coming, because it seems to be that in commercial real estate especially, we're almost decades behind in a lot of these things, just because there's a lot of paperwork that is probably, I don't want to say unnecessary, but it can be optimized. Like
Hmm.
with DocuSign and everything, there's no reason for things not to be right there in all one file. Everything's together, all the HUD docs and everything else.
Yeah, and and with all the electronics and everything, I mean, it makes it a lot easier closing now than it was, 10 or 15 years ago. Because
Yeah.
I mean, like the last property that we bought February of last year, I was actually in the Caribbean when I signed the paperwork.
Nice. It's funny because the first multifamily I bought, I signed the docs when I was on the boat in the Bahamas. So, and
Nice.
there was a storm coming in, and I was like, it'll pass. And I was signing, signing the docs, and I was like, I don't care if it hits us. I was like, we just bought it. I'm pretty happy. We got, all we got to do is let out more chain. We'll be fine.
Yep.
It's just one of those things where it was. I said to myself at that point, I said, "Wow, this is really a game changer. This is amazing that we can, in this day and age, we can actually do something like this, and it's only going to get, it will only get better because I think as we get further along, there'll be a lot more businesses because people are saying that title will go away, and I don't think title insurance will ever go away because somebody has to be responsible for housing and keeping those documents at a straight and be responsible and take the liability for finding out if there are any issues anyway. So they won't go away even if it's on the blockchain and it's all public information.
Blockchain will just help simplify their job if they'll let it.
Yeah, if they can't see it as a competitor, but as an optimizer, really, it can make them be able to do way more. Instead of doing 5 a day, they could do 50. And granted, the transaction cost will probably come down, which I think we'll all love that.
Yeah,
but,
one would hope.
Yeah, one would hope, but it's one of those things where you may not have as many of these types of companies or admin type services, but you will still have. I think it will cause a lot of our person to person interactions to be much more genuine. I think because we're going to have to be more transparent and have to be optimize what we're doing and who we're talking to more, and that personalized service will only go up because you, like as a broker or in any line of work, you will have to be more aligned with the customer's interests.
Yeah, absolutely.
And that's one thing as a positive I see. Granted, we're going to have to take the good with the bad. There, it's not going to all be sunshine.
Yeah, there'll be some hiccups along the way.
Yeah, and there'll be people that'll be using it for illicit means and stuff like that, and be doing some crazy stuff. But you can't get away from that because there's going to be a few people that always. We're going to have some kind of guardrails on there for. But what do you see in the next few years with you guys at Craft Capital? What do you see going forward? Are you going to go steady as she goes, or are you guys kind of moving more in a certain direction?
I think the course we're on right now, we're probably going to be, ramping up to cruising speed.
Okay.
We want to continue being multifamily owners and operators. We'd like to do, 2 to 4 properties a year. We want to build out the team to where we can make it more consistently 4 a year. Now, do we ever hit that? Who knows? But that's a target. One of the things, like I said, we're just rolling out the Flex Fund. We want to continue to grow that and look at some of the options. One of the things I did over the last month or so was develop a risk framework so that we can consistently analyze and put a numeric score to what we think the risk items are on a particular property or investment or team. And we go through and, we've got I think there's 11 basic categories, and each category has, 4 to 7 subcategories. Everything gets scored. And the goal is to be able to have a sheet that we can give to investors to say, here's where we think the risk items are and where you should focus the most of your time on due diligence. Obviously, we encourage people to do their own due diligence, but that way that gives them the confidence.
Guideline.
and guidelines. It says, okay, here's what we've looked at and here's what we think.
Yeah.
If you think something different, that's great. We'd love to hear it so that we can understand it. And maybe we need to update our model, or maybe we need to ask some different questions.
Yeah. It's a great guideline. And then it also gets them to think, and, then you also find out what their concerns are, and what categories that they're the most, mean the most to them. Cause that's very important to find out what the investors are really looking for, because without happy residents and happy investors, there's no business.
Well, I always tell people, I said, look, the most important people in this whole process are the residents and the on-site property manager, because if you don't have residents, nobody else gets paid. The people in the office don't get paid. The bank doesn't get paid. Investors don't get paid. We don't get paid. It's just bad all around. I said, a lot of people don't realize that, the key to this multi-million-dollar business that you're running is that on-site property manager sitting in the office.
Yeah, that is paramount. That and that's golden nugget there for people just starting out. Don't misinterpret the business model to think that you can get away with not optimizing your property management. That's the key to all of it.
If you want to cut costs, which is key to running an effective business, cut it somewhere besides salary.
Yeah. Don't cut the people that are going to be optimizing the business. And executing the business plan, because it's really unfortunate that some people think that they can get away with that as a business model, because you see them fail, and they're failing now because they cut where the wrong things are. You can't cut the property management. You can't cut your marketing budget, especially if you got to get.
And you can't cut maintenance.
Yeah, and you can't cut maintenance. You can't cut the repair costs. You can cut but you can't not do it.
Yeah, you have to optimize it. I mean, you don't want to go out and upgrade everything to granite and steel and hardwood floors.
Yeah.
Especially if you're in a C-class property. Now, if you're in an upper B-class property, nice neighborhood, you might get the bang for your buck with stuff like that.
Yeah, if the key with that is do a search in the couple miles around in the area and see what they have, and maybe if you can go a little bit better, maybe test a couple of units and see if you can get the rents to come up, and maybe add some amenities that you can charge money for, like a valet trash service, covered parking, give them an extra parking spot and charge them for it. Any of those type of things that you can add on are great things that you can add income. But
one of my mentors made the comment, he was talking to a group of us and said, you don't ever want to be the first person in the neighborhood to try something. Let somebody else be the guinea pig. And if it works, then you go do it. He goes, but if he goes 9 times out of 10, he goes, if you try something new and it doesn't work, well, it's just cost you money.
That's good advice, and like I said, if you are trying something a little bit more, don't do all of them. Try 1, 2,
do a sample.
If you get a little bit more money, then do it on the turnover or what have you. Don't go, oh, we'll do all of them. No, just take your time. It's these real estate and commercial real estate, multifamily especially, it's a slow moving process because you have a lot of moving parts. The triple net, not as much, but you have this is a lot more of a people business.
Oh, absolutely. We had lunch yesterday with one of our regional managers, and she's just an absolute gem. I wished I could clone her. She's been doing this for a long time, and is really good with the teams in the office, and helping them become better at what it is they do.
Wow, that's great.
And she understands, that all the crap jobs have to get done, like the entering the invoices,
Yeah.
Walking the vacants, trying to collect on the delinquency. Those are all things that are important. But so she, like I say, she's real good about working with the team and making sure they're trained, and she supports them in every way that she can, which is great.
Yeah, that's it. That's a keeper. That's someone that you really have to really get to train other people to get them to be. If you can get other people to be 80% of where she is, then you gonna have an amazing team. Because if someone realizes that all you really need to do is provide other people the tools to succeed, and that'll help your job and what you're doing, and build the team up. I know it's a hard lesson to learn, but it's a lot easier than you might think, but it's a lot harder to implement sometimes, because we deal with it a lot on the boats, and that's one of my main mantras, is just providing whoever they are, head of department, whoever they are on the boat, that they have everything they need to succeed. And if they didn't, then why? And what do we need to do? Maybe we didn't communicate what the team's goal was effectively, and then maybe we need to go and walk back through that process, or maybe after we've done it a few times, then maybe this person's not in the right seat. Not that they're a bad person or anything, but maybe they'd be better suited to engineering, or better suited to interior, or maybe there's a personality conflict where they potentially don't need to be here in this program, and it's nothing personal. It's just something that sometimes these things don't work out. But having someone that realizes that all they have to do is implement and give the people the tools to succeed is a big step. And especially, it sounds like she's a very big people person, and very great with people. And
very much so. In
that position, that's, like you said, I wish we all had about 10 of them, 10 of hers.
Yeah.
We'd all be doing very well, including her and our 10 people. But well, this is been really great. I mean, just talking to you and seeing all the ins and outs of everything. What would you see in multifamily in general, like in this state right now? Are you seeing some distress in the market, some distressed owners? And what markets are you guys focused on in your?
So we specifically look at Dallas-Fort Worth. Our core market is really, it's an area called the Mid-Cities, which is exactly where you'd think it would be. It's between Dallas and Fort Worth. It's like Hurst, Euless, Bedford, Irving, Arlington, Grand Prairie, kind of around that middle area there. Now we'll look at any property in the Dallas-Fort Worth metro area and some of the surrounding secondary markets, but our focus is on that core. If we're not at the bottom, we're either right before it or right after it. And I think in 6 months to a year, we'll be able to look back and go, yep, there was the bottom.
Yeah.
Now, I'll caveat that by saying, yes, I do have a crystal ball. Unfortunately, it's full of mud.
Yeah. Mine's broken and dusty.
Yeah. And, it's, it's anybody's guess. But distress in the market today, absolutely. We're seeing, some properties that, they were in that, extend and pretend situation. And now the banks are tightening up on that, and they're not extending.
Yeah.
Or they're not being as favorable. Refinances are tougher, if they're possible at all.
Yeah.
So, you're starting to see some cases of what I'll call predatory lending.
Yeah.
There's some
gap, some type of rescue type capital that's coming in that's pretty expensive. It's
expensive.
Short term.
Yeah. It's like loan shark. Yeah. It's like loan shark money.
Yeah.
And, and some of
loan shark. I think loan shark terms are probably better.
Well, very possibly. And some of them are doing like, what I call kind of the loan to own.
Yeah.
They want to come in and they'll underwrite the loan, and then when you can't perform, they're
Oh,
just
they
going to
take
come in and
over.
take the property.
Oh, yeah.
So
I'm seeing that.
not only are they making money on the front end with the fees, and then you're having to pay them. Then when you get to the point where you can't pay them, they just take the property, and then now they've got a free property.
Yeah, I'm seeing some pref equity stuff
Yep.
like that that's coming in. Um, but at that level with the lender not working with them anymore, and they're in some level of distress, there's not a whole lot of options other than giving it back. And
Yeah, I mean, sometimes you've got to get really creative, and
yeah, there's private credit that's doing some things, but some of those are kind of like vulture type scenarios as well.
Yeah,
But
you've got to do your homework if you're in a situation where you've got a property and you need to refinance it.
Yeah.
Do a lot of homework.
Yeah, yes, because there's a lot of people, like a lot of operators now, they're being asked to recapitalize some of these properties and stuff, and they don't necessarily have the capital. Everything's tied up in all the other properties, and I'm seeing a little more of not just distressed properties, but some distressed operators that don't necessarily have the capital, and they were hoping to hold on to where they could hold on to these 5 or 6 properties, and this one's pretty bad, so they're hoping to try to get rid of the one, and then it's I don't want to say it's maybe a robbing Peter to pay Paul scenario where things are getting a little muddy.
No, I'm invested as an LP in a deal where we lost 91% of our money.
Oh wow!
And I know the operators personally, and they've got successful properties in Nashville and Dallas, and they were just in a market out in Tyler, Texas, which is east about
that's about an hour. So.
It's
a little more.
Yeah, it's 2 hours maybe east of Dallas.
Yeah.
But it's it's a really, there's a lot of potential in the area, but it's a slower pace.
Yeah, it's not quite there yet.
Exactly. And they bought at the peak of the market. They had floating rate debt on it. They did have a rate cap, and then the market really softened. Mm-hmm. So they just had it was kind of like the perfect storm.
Yeah, perfect storm of everything that could go wrong did.
Yeah, and they communicated through the whole process with us, and it's like, okay, yeah, we know. I mean, stuff like that happens. Are we happy? No, but
can we do anything about it? No.
Yeah, and they put over $800K of their own money into the deal to try to keep it floating. So it's not like they weren't trying. One of the things I would say to any LP investors, if there is a capital call, one of the things you want to look at is what are they going to do with that money?
Yeah.
What does the new underwriting look like? And is the debt service coverage ratio going to be good enough?
Yeah.
To cover everything? Because if it's not, you're just throwing good money after bad.
You really have to reevaluate because it's a totally different deal than what you originally signed up for at that point. And if you help recapitalize, is it going to help you get your money, your capital back out, or is it just going to help them float for a little bit longer? And you really have to take a really hard look at what the plan is going forward, because everything that happened before that doesn't matter. It's a reset part here. It's I don't want to say that your money's gone, but when they're doing a capital call, what I have seen I saw earlier this year and part of last year where people started doing capital calls early. They didn't need the money at that point, but they knew that if they
that's the best time to do it.
They asked for it before, and they didn't want to do it when everyone else is doing it, because then the answer is probably going to be no.
Yeah.
When times were okay, and then I think those properties are doing okay because they did it to, hey, we want to have more reserves. We see a tidal wave of tough stuff coming ahead, so we want to be able to get through. And I think that's an easier conversation than, hey guys, we're going to lose it all. But if you give us money, we might. It's two different
Yeah, I mean, like I
conversations.
say, you really have to look at it. And I'm sure you and I could go on talking for the next 2 or 3 hours easily.
Yeah.
I just had a meeting reminder pop up that I have an 11 o'clock. So
No, that's okay. Well, this has been really great, and I really appreciate you taking the time to, go through all the stuff that you got going and sharing your wisdom and everything. If people want to find out more about you and what Craft Capital is doing, where can they find you?
they can go to our website, craft with a C, craft capital investments with an S.com. You can find out all about us there.
Okay, that's been great. Well, I really appreciate you taking the time to speak with me and sharing all your knowledge and everything. And this is the Yacht Captain Investor out. We'll talk to you guys next time. Thank you.